Now we're going to talk a little bit about Illinois 4255s and recapture, all those 1299 credits that were just put into play here. This is the way that they are able to be recaptured if the investment property ceased to qualify. Of course, those just as a reminder is the Angel Investment Credit, Economic Development Credit for a Growing Economy, new construction edge credits and new market development credits, and historic preservation credits. So this is what the new 4255 looks like. The step 3 was added in. That is primarily to disqualify property that would come in under the edge investment credit. And page 2 here, we have the totals columns C and D. Total C is for the REV in Illinois investment credit, and column D is for the replacement tax credit. Line 19 from column C and column D respectively are for K1P, lines 54B and C. And line 20 would be there would be reported on either the 1040 line 13, 1120 line 46, 1041 line 43, or the 990T line 20. Column D, those amounts would be reported in the 1120 line 41, 1041 line 35, 1065 line 55, 1120 ST line 53, or the 990T line 14. Third page here is the sum of all credits claimed for any prior years. So if you have multiple 4255s, you would complete step 6 only in the last succeeding 4255. And again, it's the sum of all those credits that we have been discussing. So 4562, the purpose of the 4562 is reverse the effects of 30, 40, 50, 60, or 100% bonus depreciation that's allowed by the Internal Revenue Code, Section 168. It's because I don't know who's on this webinar. Just to define the terms, depreciation refers to accounting method used to allocate the cost of a tangible asset over useful life. And what we're talking about is bonus depreciation, which is a tax incentive that allows a business to immediately deduct a large percentage of that purchase price of eligible assets in a shorter period of time. So what's new on the 4562, 80% bonus depreciation is new this year. Federally, we have to accommodate for that and adjust on the 4562 for any assets coming in under the 80% bonus depreciation. And just as a reminder, Section 203 we have decoupled from the federal 100% bonus depreciation, which I'll talk about momentarily. This is what the new 4562 will look like. The new line's been added to the 4562. They account for that 80% bonus depreciation there as marked on the left-hand side. It's effective for tax years beginning after December 31st, 22, before January 1st, 2024. The instruction's been updated to reflect those changes. Line 10 is for the assets placed into service after 2027, or I'm sorry, 2017. It's September 27, and before January 1st, 2023. Anything that was elected 100% bonus depreciation, that's where you would subtract that out. 40% depreciation is in general. As a reminder, that has to be reported in the same year in which you claim the federal 40% bonus depreciation allowance for the property. But because our Illinois Income Tax Act is silent. It's subject to a federal depreciation rate of 40%. It can't be subtracted out until the property is sold or otherwise disposed of, or in other words, the last taxable year that you can claim that federal depreciation of the property, whichever occurs first. Okay. Now, what you're seeing on the screen uh, is a crash course in depreciation. We get a lot of questions in regards to how depreciation or the 4562 works. To do that, you have to go through the statutory changes that impacted depreciation over the years, the federal bonus, and the Illinois decoupling. When this initially came out in 2001, the federal government enacted 30% bonus depreciation for property placed into service after 9/11 2001. What we did here in 2002, about mid-year, we decoupled from the 30% and the 50%. So you have the Illinois allowance of that 50% bonus that could be taken for properties that entered into service at that point. So again, it was initially developed to reverse the effects of the 30% or 50% bonus depreciation allowed by 168, but over time, different acts have changed that. So 2008 to 2010, there's a Federal Economic Stimulus Act of 2008 and the American Recovery and Reinvestment Act of 2009 that impacted what bonus depreciation could be taken. So in 2002, there, with our decoupling, just a note, 50% bonus depreciation amount for qualified properties would only be for like a short year. That would have entered into service in 5/5 of 2003. In May of 2006, Illinois changed the law regarding that 50% bonus depreciation to allow tax years ending after 12/31/2005 a deduction of 100% of the regular depreciation on the property they claimed 50%. So you can see in the chart there how that changed from 42.9% to 100% of what the bonus depreciation actually was. In 2010, 100% bonus depreciation was allowed under Tax Relief, Unemployment Insurance Reauthorization, Job Creation Act. It was allowed by Illinois, and no adjustments were made at that point in time. 40% came in there in 2018-ish, and again, we're silent on that one. The modification has to be taken the same year, addition modification, but the subtraction modification is in the last year depreciation on that one. And just recently, that Public Act 102-16 amended Section 203, and that decoupled us from the federal 100% bonus depreciation for years ending on or after December 31st of 2001. That's what changed there in last year, and you could see where on the chart it had been decoupled. And because I ran through that really quick and it was kind of like a crash course in bonus depreciation, this slide reflects basically everything that I just talked about that came from that chart. So moving on to the next here. Bonus depreciation is scaled back according to federal law as they rolled that out with 100%. So in 2023, it goes down to 80%. And by 2023, I mean when properties placed in the service between 1/1/23 and 12/31 of 23. 24 is going down to 60% and phasing down all the way to 20% according to those same timelines from 1/1 to 12/31. So eventually the Illinois 4562 will expand to reverse the effects of 20%, 30%, 40%, 50%, 60%, 80%, and 100% bonus depreciation. Next section here regards automobiles and section 179. This is kind of an approach here. The blue box with is the federal caps for 2022. Actually, that's illustrated on the screen there, and the rest is our federal versus Illinois depreciation caps. So the thought experiment here is if a taxpayer would buy a luxury vehicle for $50,000 in 2021 and looking at the depreciation or what could occur with that depreciation. So on the first year, that taxpayer has two options. They could just take their 10,200 for the first year without the bonus depreciation, or they could take 18,200 for the first year with bonus depreciation. We would add back there at $8,000, and our cap again would be 10.2. The federal cap is 18.2, going down by year. 16,400 versus our 16,400 in the second year, 9,800 on the third year. We would mirror that. And the fourth year is where it starts to change a bit. 5,600, which is fully depreciated federally, but Illinois would extend that to 5,860 in the fourth year and the fifth. And ending in the sixth year for final depreciation of $1,880. So just as a note, the add back would be going on to 4562 would be 8,000 for 2021, and the special note in the 4562 instruction states that the amount actually claimed as bonus depreciation is limited by the cap, is added back or zeroed out. All right. And another note, depreciation cap can change on an annual basis. So we have to keep on top of that, and that target changes there. So this chart won't work necessarily for the next year or the year thereafter. Illinois NLD and UB NLD are returning for next year. Just as a reminder, we're on a $100,000 NLD limitation for corporations. And NLD after November 16, 2021, anything that still existed moved from 12 years to 20 years carry forward. Here's a look at the schedule NLD. It looks a lot like what it used to, just some very superficial updates from what it was a couple years ago and before it transitioned into the appendix. So we should all be fairly familiar with these forms. UB NLD, again, the same here. It's the same form that we remember as a schedule from before that became the appendix that is now going to be a new schedule. The only difference between them is that you again have to supply them to the department as you claim NLD. All right. Schedule B, that new reporting here, Section A, line 6 is added. Total pass-through entity credit paid, and line 7 is total entity tax pass-through entity tax credit received and distributed will be reported on that line 7. It changes from a horizontal to vertical orientation. Section B, line K is PTE tax paid, and we also have another line for received and distributed. So here is what the Schedule B will look like for the new year. And here's a closer view here. So you have Section A, line 6 was the total pass-through entity credit paid there. And Section A, line 7, total pass-through entity credit received and distributed, the total amounts. And as we move to page 2, you have, again, that shift from horizontal to vertical, and you have lines K, which is just the credit paid for the individual member, and line L, which is the credit received and distributed for that individual member. Okay. So line L, just as a preview, that's each member's distributive share of PTE tax credit that's passing through K1Ps or K1Ts that are received. And that's a major change for this year. We're reporting the received PTE from both K1Ps and K1Ts on the Schedule B. All right. K1P 3 change. You're able to subtract out distributed share of received PTE credit for non-resident members on line 17. The intention here is if it's a non-resident member, is for them not to have to file. Schedule D mirrors Schedule B changes. Is just the total pass-through withholding that are due on line 3. You have the total pass-through entity credit received and distributed, and the horizontal and vertical changes. And again, a closer view here, Section A, line 3. That's your total withholding due for non-resident beneficiaries. Section A, line 4 is total pass-through entity credit received and distributed. And to the second page, again, it's the member-specific PTE tax credits received and distributed. Again, K1T change is mirroring the K1P change. It's on a different line. We're on line 13 here. This is where you would subtract off the received PTE credit for non-resident members. Illinois 220 is a third page now to Illinois 220. It's a new worksheet for 1120 ST and 65 filers who like to pay PTE tax or annualizing their income. So we're still following the 100% or 90% rule, but PTE, if the election wasn't made for the prior year, the basis for estimated payments is 90% of the current year's liability. Okay, so generally PTE, if you elected it for the prior year, it's the same as it was before. Whether you did estimated extension return payments, the total minimum required estimated payments are 90% of the current year's tax liability, or that 100% of tax liability in the prior year. But the change was if there was no PTE election, then you're limited to the 90% of the current year. WCI and 1299, we've already talked about agrotourism. Just a little bit on the definition there. It's the lesser of 100% of the liability insurance premium paid or $1,000. and also the recovery employee it is for employees recovering for mental illness and are allowed time off for that recovery for mental illness or substance abuse. Everything else, the programs itself, we need to refer back to each of the departments, of course, that are administering those programs. Okay, now on to withholding. New for this year is an organ donor credit. Generally, there are 4 things that are necessary there. An employer has to offer 30 days paid leave. There is a credit that would be issued for each employee that's taking that leave for a donation that has to be verifiable by documentation of organ and bone donor, or actually bone marrow donor. And all that information needs to be managed by the employer. On agreement of that, some sort of a credit would be issued on the WC. All right, this is the WC. The only active credits that we know of for certain right now is the 0900, which is the minimum wage credit, and the 3000, which would be the organ donor credit. I'm not sure on the 5900 edge tax credit. It's not a common credit. It may drop off, it may not drop off. The 5910, the last time that was issued was 2018. I wouldn't be surprised if that one doesn't expire and fall off the WC. Okay. Amended Schedule PX. The only real change here from the P is the first column, which designates changes that are made to any one of your employees that are listed there on the P. It makes it a lot easier for any amended changes that are running through and processing for us to find which one out of the 100 or the 25 that are in the page that comes through had changes. The Secure Choice Savings Program, this is something that we are going to enforce, or there's be compliance enforcement. We are going to be issuing letters after 100 days, 120 days to assess penalties. Those penalties are based on your Schedule P Schedule P reporting of number of employees. What's listed on the page is the Tier 1 and Tier 2 penalties. We are just sent a file and we issue the letter. Otherwise, our involvement would be if anything needs to be corrected, that would be your amended 941 and your amended Schedule P. Okay.